Welcome to Mining Review Africa. Today I'm chatting to Juanita Putter, the Manager of Mining Guarantees at Credeq Africa. Juanita, welcome.
Thank you, Rochelle.
Why is the DRC becoming such a strategic focus for Credeq Africa, and what makes the market unique from a mine rehabilitation perspective?
So, Rochelle, what we found is that the DRC has really moved away from being a regional market to actually be the epicenter of the global energy transition. So it's really grown and expanded, and with that sort of excessive mineral boom comes a lot of capital-intensive projects. And then with that increasing mining footprint, there also is a rapidly compounding environmental liability that goes with it. So that is making the DRC market quite unique, because there's also a thing we call structural sovereignty in the DRC. So the DRC Mining Code and Decrees requires that mining companies in the DRC make sure that when they provide for environmental liabilities, that they do it with local institutions. So that paper must be local. So you will find that from like Johannesburg or London, if that rehabilitation guarantees are issued, it's a dead letter. It doesn't mean much. And then to complicate it even more, they do follow a dynamic financial provisioning model. So what that means is that they must make sure that their rehabilitation guarantees keeps up with what the actual footprint is on the ground. So there's a clear paradox there, I suppose, because your international stakeholders of mining companies would require that, you know, the obligations that the financial institutions guarantee are done by institutions that are very strongly rated. But then at the same time, the local authorities are requiring this local paper. So a clear paradox there. And I suppose this is where Credeq Africa really bridges the gap perfectly. So we do that through a local fronting mechanisms that we've got in place. So we partner with local financial institutions within the DRC. They then issue the rehabilitation guarantees, but at the same time in the background, we will reinsure it. Credeq will underwrite it, and we'll reinsure it through Lombard Insurance Company's balance sheet. And then we're also further supported by our S&P A-rated reinsurers in Europe. So it's the best of both worlds for mining companies through this structure. And it's not just a service delivery, it's almost like supporting balance sheet and capital efficiency within one of the world's most critical supply chains.
Of course. How are mining companies being impacted by the DRC's evolving rehabilitation guarantee requirements?
Yes, Rochelle. So the mining companies in the DRC is facing an unprecedented shift. It's moving away from administrative paperwork mostly to real balance sheet risk. They have to now really go and prove that they can go and stand behind their financial promises for this rehabilitation. So that's firstly what they need to do. And then, I mean, the DRC Ministry of Mines has recently announced there's a 31 July 2026 deadline. All mining operators have to go and prove that their rehabilitation guarantees are local, firstly, fully compliant, and then also reflecting the actual mining footprint on the ground. Now that enforcement will be swift and punitive from what we believe, and these operators can actually lose their mining licenses and then also their export permits. So that could be quite a big thing for these mining companies. And then that static provisioning trap, so we said they have to provide dynamic financial provisioning, so a lot of legacy guarantees maybe in those mining companies that hasn't kept up with the actual footprint on the ground, so they'll have to go and fix it, and it's exposed that, I think, through this announcement from the ministry. And then if mining company wants to fix it and they go to their banking partners, that will also become an issue for them, because that will eat up a lot of their valuable credit lines. And then also maybe in a lot of cases the banks require some cash collateral. So when that happens, the mining companies are a little bit in a crunch because they want to use that cash elsewhere, and it's a liquidity killer for them. So they have to balance all of these things in the DRC.
Why are partnerships and local market collaboration critical to operating successfully in the DRC and broader African mining sector?
Yeah, so collaboration, I think, on the African continent is very important. I think to succeed in African mining finance, you have to solve firstly this local global paradox. And there's international stakeholders that will keep focusing on being, does those obligations get issued by deep financial strength institutions and insurers? And then at the same time, again, this local requirement that these guarantees should be issued locally. So that is, I think that is a big challenge that these guys are facing. And this is where our strategic partnership with Access Bank, Credeq Africa's partnership with Access Bank together with Lombard Insurance Company, is so revolutionary. So what we will do is we will leverage the Access Bank Pan-African footprint to bridge this gap. Access Bank will issue this statutory compliant paper in the country, but at the same time this will also alleviate the concerns from the mines that when they have an audit on the go that it is compliant paper. But then at the same time, we will be standing behind them, taking the risk, and the international stakeholders get satisfied that we're taking like strong balance sheet security and putting behind that.
Sounds good. How do insurance-backed rehabilitation guarantees help mining companies manage capital more electively?
Yeah, so I would say Credeq Africa's ultimate goal is to ensure absolute balance sheet efficiency. So historically, environmental liability guarantees that wasn't unfunded or is unfunded was seen by lenders, stakeholders, very much as a black hole risk. So it's something that's very vague, very long tail obligations that can erode equity. So what we bring is an insurance-led structured solution whereby we give day one certainty and we try to ring fence that environmental liabilities from operational vulnerability. So instead of freezing up a lot of cash with your banking institutions, this is an insurance solution that then brings that additional benefit to the mining companies. And the three main benefits, I would say, through this insurance-led solution is that firstly, the mining companies doesn't utilize that banking lines that they can use for operational growth, development, expansion, and then that sort of vague environmental liability that was there sort of gets converted into a clearly audited roadmap that also addresses greenwashing concerns. And then I would say lastly, it aligns the mining company, the insurer, and the stakeholders to ensure that environmental liabilities are fully funded by the time that those resources are exhausted, and then regardless of future market volatility.
Great, Juanita. Thank you so much for joining us today.
It's a big pleasure, Rachel. Thank you.